Welcome to our new IFRS Educational Fund series. It is an initiative of OJ Inspiration Limited. It is dedicated to providing complementary and supplementary education on International Financial Reporting Standards, IFRS, through a multiple choice question and answer approach. It is intended to make learning or intellectual assurance fun. In this session, we shall be considering 10 questions of set 1 to which the answers are provided on IFRS 6. This is standard on exploration for and evaluation of mineral resources. Viewers and subscribers have 30 seconds to select or choose the answer to each question. The answers to the 10 questions are revealed at the end of all the questions. Please enjoy it. Question number 1. IFRS 6 applies to which of the following? A. Exploration and evaluation expenditures. B. Royalties paid on oil and gas find. C. Expenditures incurred before prospecting license is got. D. Expenditures incurred after technical feasibility and commercial viability of extracting mineral resources are demonstrable. E. All of the above. Time counts. Ten seconds gone. Twenty seconds gone. Time up. Question number 2. Which of the following is not an element of cost of exploration and evaluation assets? A. Acquisition of rights to explore. B. Trenching. C. Geophysical and geochemical studies. D. Sampling. E. Refining expenses. Time counts. Ten seconds gone. Twenty seconds gone. Time up. Question number 3. In developing this accounting policy for the recognition and measurement of exploration and evaluation assets, an entity is exempted from which of the following provisions of IAS 8? A. Considering requirements in IFRSs dealing with similar and related issues. B. Considering the definitions, recognition criteria, and measurement concepts for assets, liabilities, income, and expenses in the IFRS framework. C. Considering the most recent pronouncements of other standard setting bodies that use similar conceptual framework. D. All of the above. E. None of the above. Time counts. Ten seconds gone. Twenty seconds gone. Time up. Question number 4. With respect to the development of mineral resources, which of the following standard or standards is or are considered in establishing whether the development gives rise to an asset? A. IAS 2, B. IAS 16, C. IAS 38, D. IFRS 6, E. IAS 16, and IAS 38. Time counts. Ten seconds gone. Twenty seconds gone. Time up. Question number 5. When technical feasibility and commercial viability of extracting a mineral resource are demonstrable, which of the following standard or standards applies or apply? A. IAS 2, B. IAS 16, C. IAS 38, D. IFRS 6, E. IAS 16, and IAS 38. Time counts. 10 seconds gone. 20 seconds gone. Time up. Question number 6. When technical feasibility and commercial viability of extracting a mineral resource are demonstrable, which of the following holds? A. Exploration and evaluation assets are no longer classified as such. B. Exploration and evaluation assets remain classified as such and are tested for impairment. C. Exploration and evaluation assets remain classified as such but are not tested for impairment. D. Exploration and evaluation assets are written off to profit or loss. E. Exploration and evaluation assets are written off to return earnings. Time counts. 10 seconds gone. 20 seconds gone. Time up. Question number 7. Impairment loss arising from exploration and evaluation asset is dash. A. Capitalized with their subsequent asset reclassifications. B. Not recognized. C. Deferred until commercial viability is demonstrable. D. Recognized in profit or loss. E. Recognized directly in the appropriate reserve. Time counts. 10 seconds gone. 20 seconds gone. Time up. Question number 8. Exploration and evaluation assets are presented as dash. A. Current assets. B. Non-current assets. C. Non-current assets held for sale. D. A disposal group. E. Management may elect to classify. Time counts. 10 seconds gone. 20 seconds gone. Time up. Question number 9. An entity recognizes any obligations for removal and restoration that are incurred during a particular period as a consequence of having undertaken the exploration for and evaluation of mineral resources in line with dash. A. IAS 16. B. IAS 37. C. IAS 38. D. IFRS 5. E. IFRS 6. Time counts. 10 seconds gone. 20 seconds gone. 'Time up. Question number 10. Expenditures incurred by an entity in connection with the exploration for and evaluation of mineral resources before the technical feasibility and commercial viability of extracting a mineral resource are demonstrable are called dash. A. Tangible expenses. B. Intangible expenditure. C. Exploration and evaluation expenditures. D. Exploration and evaluation assets. E. Exploration and evaluation of mineral resources. Time counts. 10 seconds gone. 20 seconds gone. Time up. We proceed to review the answers. Question number 1. The answer to question number 1 is A, exploration and evaluation expenditures. IFRS applies to exploration and evaluation expenditures that an entity incurs. This standard does not address other aspects of accounting by entities engaged in the exploration of and evaluation of mineral resources. IFRS 6 does not also apply to 1. Expenditures incurred before the exploration of and evaluation of mineral resources, and 2. Expenditures incurred after the technical feasibility and commercial viability of extracting a mineral resource are demonstrable. A is the answer to question number 1. Question number 2. The answer to question number 2 is E, refining expenses. Expenditures incurred that are subsequently considered as evaluation and exploration assets are only those incurred from the granting of prospecting or exploratory drilling license or permit up to the ascertainment of technical feasibility and commercial viability demonstrability. Expenditures incurred before or after this period or belt do not form part of the cost element of exploration and evaluation assets. E is the answer to question number 2. Question number 3. The answer to question number 3 is D, all of the above. IFRS 6, which is exploration for and evaluation of mineral resources, is an interim standard that is not yet an output of comprehensive review of accounting practices used by entities engaged in extractive activities generally. The IFRS framework itself and the other standards do not have outputs that are considerations of the various accounting practices found in the extractive industry. Therefore, in developing accounting policies with respect to the recognition and measurement of exploration and evaluation assets, IFRS exempts entities concerned from considering paragraphs 11 and 12 provisions of IAS 8, which deals with accounting policies, changes in accounting estimates, and errors outlined in the options of the answers to this question. Rather, IFRS prescribes the application of paragraph 10 of IAS 8 as enhanced by the provisions of IFRS 6 in the use of judgment by management in developing accounting policies concerning the recognition and measurement of exploration and evaluation assets. D is the answer to question number 3. Question number 4. The answer to question number 4 is C, IAS 38. IAS 38 intangible assets and the conceptual framework provide guidance on whether asset arises from the development of mineral resources. Expenditures related to the development of mineral resources are not recognized as exploration and evaluation assets. C is the answer to question number 4. Question number 5. The answer to question number 5 is E, IAS 16 and IAS 38. When technical feasibility and commercial viability of extracting a mineral resource are demonstrable, an entity applies IAS 16 and IAS 38. For exploration and evaluation assets that are tangible, IAS 16, property, plant, and equipment is applied, and IAS 38, intangible assets, is applied to exploration and evaluation assets that are intangible. E is the answer to question number 5. Question number 6. The answer to question number 6 is A, exploration and evaluation assets are no longer classified as such. When the technical feasibility and commercial viability of extracting a mineral resource are demonstrable, exploration and evaluation assets are no longer classified as such. They are classified as items of property, plant, and equipment or intangible assets, depending on their components, upon which IAS 16 and IAS 38 are applied respectively. A is the answer to question number 6. Question number 7. The answer to question number 7 is D, recognizing profit or loss. Exploration and evaluation assets are assessed for impairment, and any impairment loss is recognized in profit or loss in line with IAS 36 impairment of assets. D is the answer to question number 7. Question number 8. The answer to question number 8 is B, non-current assets. Exploration and evaluation assets are presented as part of non-current assets. They remain so presented until they are reclassified as either items of property, plant, and equipment or intangible assets that are still classified as non-current assets, upon which IAS 16, property, plant, and equipment, and IAS 38, intangible assets apply respectively. B is the answer to question number 8. Question number 9. The answer to question number 9 is B, IAS 37. An entity applies IAS 37, which is on provisions, contingent liabilities, and contingent assets in recognizing any obligations for removal and restoration that are incurred during a particular period as a consequence of having undertaken an exploration for and evaluation of mineral resources. B is the answer to question number 9. Question number 10. The answer to question number 10 is C, exploration and evaluation expenditures. Exploration and evaluation expenditures are expenditures incurred by an entity in connection with exploration for and evaluation of mineral resources before the technical feasibility and commercial viability of extracting a mineral resource are demonstrable. When they are recognized as assets in line with an entity's accounting policy, they become tangible or intangible exploration and evaluation assets, depending on how they are classified. When technical feasibility and commercial viability become demonstrable, they are reclassified as items of property, plant, and equipment or intangible assets based on their tangible or intangible forms, respectively. C is the answer to question number 10. That is all for this set. Thank you for joining us for the set 1 of IFRS 6, Exploration for and Evaluation of Mineral Resources. We invite you to subscribe to our channel, share our links, and invite those in your network to do the same. This will enable you and all other subscribers get direct notifications on future video uploads. We intend to cover all of the standards in this framework and create further sets of questions and answers on standards already covered. For collaboration in this area, please call or WhatsApp +2349 030 770109. All rights to this production and others in the series are reserved for OJ Inspiration Limited. Thank you once again, and bye for now.